Hello everyone, welcome to our channel Smart Money. This is the English version of the videos that we have been presenting to you in Telugu for the last 1.5 months. There have been several requests asking us to make the same content in English so that it can be better understood and understood by more as well. So here we go. Before I get into the video, I'd like to say that we are not SEBI registered advisors, so please do not consider this as any financial advice. Request you all to please consult with your own financial advisors before you take any action with respect to your investments. Now getting into the video. So for the first video here, I'd like to briefly get into what this channel is about and how it was built and why it was built. I am Geeta from Hyderabad. I also have my fellow teammates who are making videos and building this channel along the way. And we have been investing for the last 5 to 6 years. In fact, seriously investing for the last 5 to 6 years. But even before that, we were all interested in the stock market, have been tracking the markets, have been doing some kind of, investing here and there. But, we've done, through this time, we've done several kinds of investing. We did trading, we did day trading, we did value investing, we did fundamental investing, and we also did the candle chart, technical trading, etc. But there were several issues with all the kinds, like for example, with fundamental trading, fundamental investing, we had to do a lot of research into the companies, detailed research into the companies. For technical investing, we studied a lot of charts, we studied different kinds of charts, we studied different kind of, candles, candlesticks, movements, etc. And of course, day trading is like it's a long process where you sit through the session, you sit after the session, you sit before the session. So I think you're getting the crux of it, that basically all of these trading methods or investing methods have consumed a lot of our time. And as full-time employees, it was very difficult for us to sort of put across this kind of time aside for, building our wealth and also keeping it up. So at that juncture, what happened is we came across momentum investing. And the momentum investing also, we did not directly get into building our own portfolio, but we started through small cases. I'm sure several of you would have already, are at this stage or at the stage before. So we went through similar processes, and we used small cases to invest in momentums. We also used a lot of blogs then to parallelly also try to build our own portfolio. We read a lot of research papers, we read a lot of books, and all of that together is where we came to building our own momentum portfolio in around 2021. So for the past 2.5 to 3 years, we have been building our own portfolio, and we have seen some successful returns with that. In fact, I'm linking mine and Shekhar's verified profit and loss accounts in the description for this video. So you can also go through and see how it has performed. So coming back to why we have done the channel, why we are doing the channel or posting videos, is that we found that, building this portfolio also happened through knowledge that is available in the public, right? So we wanted to take it back to the public to see, to also showcase our experience. This is more like an experiential sharing with all of you around here. That is one point. The second point is that we realized that, building our strategy is pretty simple. When I mean simple, I'm not undervaluing the efforts that go into it. What I mean is there are enough resources for all of us to build a portfolio or a strategy on our own. However, in momentum investing usually tests your patience. It's a patience game, right? So you have to stick to the strategy, you have to stick to the rules, you have to, however long it takes, you have to stick to the strategies that you have finally arrived at, right? So one other way to do that is to put it in public. When you do put it in public, you'll also have that inspiration, chance, everything to sort of go through the entire process that you have. That was another reason. And the third reason is that when we look at investing, when we look at stock markets, there are a lot of videos related to futures and options, trading, how to pick stocks, how to pick value stocks, how to pick fundamentally good stocks, or what portfolios they are holding, and other kinds of, mirror kinds of investing options are available for videos. But when it came to momentum investing, what we felt was there is limited content. Of course, there is content, but there's limited content. And especially with respect to, publicly putting out one's portfolio or building it, there are very few people that have been doing this for some time now. So we wanted to bring out this content for all of you. In fact, we initially began in Telugu language, which is our native language. And we did that because in Telugu, we found that these momentum strategy building videos were even few and far between. In fact, I may be right if I say that there is no one else building a momentum portfolio in public in Telugu. So a lot of your followers have then requested us to make the videos in English as well. obliging to that, we are here with our English versions. We already have one English video released. I'll also link that in the description over here. Simultaneously, we're also posting a blog. You can go and check that out in case you feel like you want to go through the charts that I'm showing or the presentation that I'm showing. Everything is detailed out in the blog. I'll also link the blog down here for you. In fact, if you also are a Telugu speaker and do understand Telugu and want to watch this video in Telugu, it is also available in Telugu. And I'm going to link the Telugu video also over here down in the description for you. Now, without further ado, let's get into the video about building a momentum portfolio. Again, before we get into the video of building our own DIY momentum portfolio, I would like to say that we are not SEBI registered advisors. So any content shared on this platform through these videos are just for educational purpose. And these are not suggestions as such to build your portfolio in such a way. So please consider these only as our experience and educational videos. And if you want to take any decision with respect to building your own portfolio, I would strongly suggest you have a consultation with your own financial advisor. In this video, I will be covering 4 important aspects. One is fundamental beliefs that one should have before going on to constructing their own momentum portfolio or strategy. The second one being why momentum at all, right? We have briefly touched upon why momentum worked for us, but why should one choose momentum at all? Why is momentum investing objectively a good strategy to take ahead? The next thing I will cover is what is momentum at all, right? So even before I want to build my own momentum portfolio, I need to understand what momentum is. Of course, I'm assuming that there will be some people that may not understand momentum, which is the reason I'm going to take us through briefly about what momentum is. But I also understand that most of you who are here do understand what momentum is. And the last part that I'm going to briefly touch upon today is how to build a momentum portfolio step by step. I will be covering a couple of steps in this video. Now, going further in the video, the first thing is about the fundamental beliefs. Now, I think it goes without saying, it's very axiomatic when I say that one should have very strong faith in the markets that they're investing in, right? So if they're investing in, let's say, a particular sector or a particular country's stock markets, we should believe that, there is a growth story to this. So in our case, it's the Indian economy. And we strongly have to believe that the Indian growth story is good and is going to happen. So what I mean to say is that there may be dips, there may be shocks, crashes, etc., that the stock market will witness. But the idea, fundamental belief would be that despite all of this happening, the market will bounce back. The economy is so strong that the market will bounce back, and we all will have a piece of cake in the success story of India's economic growth. Now, the second important thing, and this is very specific to momentum investing, is that stocks which are moving up will continue to move up. It sounds counterintuitive, right? Like most of us, what we do is, in fact, I am also guilty to doing such things, that when a stock moves really up and when it reaches a good up move, we fear that, that may be the most highest move. And we probably sell it off or, take such decisions with respect to it. In fact, sometimes that high peak may be the highest peak, but we don't know. And in momentum investing, our belief is that a stock, when it grows, it will continue to grow, right? So that itself is a momentum. And that is a fundamental belief a momentum investor should have before they launch on to building their own portfolio. The third point is, again, like the first point, applicable to almost all kinds of investing and trading. It is that cutting a loser is as important as the stock selection, right? Right. So it's always better to cut our losers faster or sooner, because if the stock starts losing its value, the further it keeps losing its value, the greater gains we need to sort of recover that entire loss. For example, if there is a loss of 10% for a stock, then the amount of gains we need to recover that loss will be 11%. That might seem small, right? But when we keep going further down, like for example, if there's a 40% loss for a stock, the gain percentage that it requires to recover is 67%. That is pretty huge. In fact, if we lose a stock loses its value by 80%, then it takes around 400% gains to recover the same value. So if you see the sort of progressions in which we need to gain to recover a stock, you'll understand that, cutting losers sooner is more important. If you're interested in understanding how I have arrived at these calculations, my colleague has done a detailed article in Substack. I'm also going to be linking that in this description. Please check it out to understand how more losses would recover very, very heightened gains to, recover the loss. Now, considering that we have established these fundamental beliefs are extremely important to go ahead to build our momentum portfolio, I will now take you through understanding of why momentum investing. I did touch upon why it worked for us, but here I would like to touch upon why exactly is momentum investing an objectively good decision to take. We can see three reasons over here. The first one is a proven outperformance. Second one is it's very simple to create. Third one is it's unbiased. So with respect to proven outperformance, I think this is it is statistics backed, and this will take care of most of convincing to look at momentum. If you're looking at the chart right in front of you, it's a chart which compares gains, returns of two different things. The blue line being Nifty 200 Momentum 30 Index. What is that? Which means that 30 highest momentum stocks have been taken from Nifty 200 universe, and they have been tracked for the last 15 years. And they have also been rebalanced once every 6 months. So this blue line shows the returns of that index of Momentum 200, Nifty 200 Momentum 30 Index. Now the yellow line is the returns of the universe itself, Nifty 200. Now I think the chart clearly spells it out for us that in the last 15 years, the momentum index has outperformed the universe, Nifty 200 index. In fact, the number of days that it has outperformed largely outweighs the Nifty 200 itself. If I have to take an example and say, if you have invested 1,000 rupees in both of these indices in 2005, the Nifty 200 index would have given you a return somewhere around 7,000 rupees. And the Momentum 30 index, Nifty 200 Momentum 30 index has given you returns somewhere around 15,000. That is literally doubling of the returns. So I think chart definitely clearly indicates that momentum investing has outperformed the index investing in the last 15 years. This is a case study that we have shown you for the Indian market scenario. But there are several research papers that prove and time and again reprove that this has been the case for several other countries outside of India. Now, moving on, the second reason why we are looking at momentum as an investing strategy is because it is simple to create. For example, it doesn't have a lot of jargon, formulae, calculations, etc., and can be built by anyone in a simple manner. In fact, when I come to the discussion about how exactly you can build your momentum portfolio, you will more and more appreciate and agree to this point that it is pretty simple to create. Now, the third point is it is unbiased. What do I mean by it being unbiased? So the thing is, when we are analyzing stocks as individual entities, there may be a lot of things. For example, there may be news that affects our emotions. There may be our own prejudices, our own biases that may affect the stocks that we are picking in. Despite how the chart looks, despite how the fundamentals look, we all are in some way or the other biased by our emotions. But in momentum investing, the strategy is simple. If a stock is moving up and it is showing momentum in the way that we define momentum, we invest in it. We love it. If it is not showing momentum, we don't love it and we're going to exit it. So it is unbiased. Whatever I feel about towards the stock, towards the company, towards the directors, towards the owners, towards anything, or whatever the influencers might say, whatever happens, we can be unbiased in a momentum strategy. So I think fundamentally these three things sort of for us make a very good case to choose momentum in investing rather than others. Let us now look at what momentum is, and by defining what momentum is, we'll all probably be on the same page, and therefore it'll become easy for us to continue our discussions when we are building the momentum portfolio together. Now, a stock would be in momentum if it's continuously giving us an up move. It becomes easy if I show you with an example. Let me show you with an example. Now, this is the chart of Bajaj Auto stock, and as of April 1st, if you look at it, in the last 1 month, it has given a return of around 15%. And I think in the last 60 days, again, if we track, it has given us a return of around 21%. Similarly, for the last 3 months or 90 days, it has given us around 38% return. And if you look for the last 6 months, it has in fact given a whooping returns of around 83%. So what I mean is that if a stock is continuously in the up move at whatever time period that we are taking, then we consider that stock to be in momentum. Whatever the look back period is, it can be 1 month, it can be 3 months, it can be 6 months, it can even be 12 months. So if a stock is giving us an up move during our look back periods in the last few months, then we say that a stock is in momentum. In fact, we want to hold such stocks. We want to keep such stocks because first, like we've established in the beginning, that any stock which is moving up will continue to move up, right? So now that we have looked at what momentum is, let us go into the actual, part of building a momentum portfolio. In this section, we will see how to build a momentum portfolio. There are 4 steps that are involved in building a momentum portfolio. These 4 steps are more or less the ones that we have developed for our own convenience. And it's the same thing that I'm going to share with you right now. So the first step is what stocks to invest in, right? So there may be many stocks that are doing well and they may be in good momentum. So how exactly do I pick the stocks and what stocks should I invest in? The second step would be, okay, I have decided what stocks I have to buy. So how much should I buy each of it? So should I buy proportionally? Should I buy? How do I give a weightage? So how much should I invest in each of the stock? And step 3 is when to invest or when to enter. So while we identify the amount of stocks, the number of stocks, which stocks we want to invest in and how much we want to invest in, entry point is also very critical and crucial when we discuss how to build a portfolio. When I discuss about the step 3 in detail, I will deal with why this entry point is so important and how do we pick an entry point. Moving on for the step 4, the last step, we also should know when to exit. As I discussed, it is important for us to cut losses sooner, either stock-wise or portfolio-wise. So understanding this step of when to exit remains very important. In this video, I will be covering only the step 1 in detail, and the step 2, 3, and 4 will be covered in the following video. Without further ado, what stocks do I invest in? Step 1. So this can be further divided into 2 important things. One being, we have to eliminate the weaker stocks, right? So let's say that we have a universe that we have chosen. We have to identify the strong stocks, strong momentum stocks, and eliminate the weak ones. Once we have done this, then we will be picking 15 strongest momentum stocks that will now form a part of our portfolio. So how do I eliminate these stocks? How do I eliminate the weak stocks? Or how do I choose the strong stocks? So for that also, we have a 6-step plan, which we usually follow, which is again right in front of your screens. The first one is to choose your universe. Like, what will be my universe from which I will pick these momentum stocks? For us, Nifty 200 made more sense. But if you are interested in including some more small cap stocks, you can go and make Nifty 500 your entire universe. There also may be people who are open to more risk. Therefore, to include micro cap stocks, you can also use Nifty 750 as your index. But for us, given our risk appetite and the way we want to build a portfolio, Nifty 200 index seemed like a good universe to start with. Now, once we have identified our universe, we also need to identify stocks that are in up move, right? The entire point of momentum is to look at stocks that are in up move. Now, how do we do that? We'll do that through 2 steps. The second and third, which is we'll take the closing price of the stock and we'll see if it is greater than the 100-day EMA. EMA is nothing but an exponential moving average. So what if the stock price has to definitely be greater than 100-day EMA. And this 100-day EMA definitely has to be greater than 200-day EMA. So essentially what we are doing is we are seeing that our stock is higher than the moving averages, which means that it is showing a positive momentum upwards, right? So these two ensure that we are picking the stocks which are in the up move only. Now coming to the third thing, we essentially want the stocks to have given better performance, better returns than the FD or the fixed deposit investments that are available to us in the banks. Considering that the FD rates have remained somewhere around 6 to 7%, I'll take an average of 6.5. We need to ensure that our 1-year return of our stocks, the stocks that we are choosing, is definitely greater than 6.5%, which is the FD rate. In case this rate changes in the future, and if you're trying to invest 10 years later, then you have to dynamically adjust the FD rate to the rate that is present at that point of time. right? So currently, for today's use, for current use, we are using 6.5 as the FD rate. We want the stock to be somewhere within the range of 20 to 20% of the 52-week high. So why we are having this filter is that so any stock which is less than or lower than the 20% of its last known high has a higher chance of correction. So it might go down. So what essentially when we are looking for stocks that are in momentum and are going up, we need to have a threshold below which we will not be considering the stocks as they are in momentum. So for us, we have come up with this filter wherein we will choose stocks which are in the range of 20% from its 52-week high, or they're touching new highs currently. Moving on, we also have an important filter, which is that stocks should necessarily have more than 50% up days than down days in the last 6 months. Now, why is this? This is so we avoid volatile stocks. So we don't want a stock moving like 80% in the last 1 week and then correcting again by 40% and then again moving very up. So we're essentially trying to avoid volatile stocks, and we are trying to identify stocks that are moving secularly upwards. So we want more number of up days than down days, and essentially avoid these up and down movements, like very finicky, volatile movements. Now, the last and important filter would be that the stock should not be in trade to trade, which means that stock should be liquid. Ideally, if your universe is Nifty 200, you have almost covered this by limiting your universe itself. But if you're taking other universes like Nifty 500 or Nifty 750, one should also be careful not to identify the stocks that are in trade to trade so that you have liquidity at your hand, right? So that's also very important. Now, considering all of these 6 filters to eliminate the weak stocks, let me show you in real time how this is done. I'll be using TradingView. You can use any other platform, but TradingView has been a platform that I've been using for some time now, and I'm comfortable with it. So I will show you how to carry out all of these filters on TradingView. Okay. The first and foremost thing to apply is the index filter, because that will be our universe and we want Nifty 200. We'll be looking at the 1-year performance, which has to be higher than our FDV, which is 6.5 in this case. Next, we'll be looking at price and EMA, and we want our price to be above the exponential moving average of 100 days. And let me also add another filter we had discussed about the exponential 100-day exponential average being greater than 200-day exponential moving average. So we have to manually set up these filters because they are not readily available to us. Moving on, we'll also be adding the price filter, where we want the price to be somewhere in between 0 to 20% from its all-time high value or the highest high value, and that too for 52 weeks. Now we can see that we have around 142 stocks, and let me remove everything that I think is not very useful for our present exercise. So I'm going to be keeping only the price, percentage change, market cap, and sector. I will also be adding the performance rankings of 6 months, 3 months, and 1 month. Like I said before, the 6 months, 3 months, and for 1 month performance should be enough to understand the kind of momentum a stock is going through. So we don't have to backtrack it to 1 year. 6 months will also do just fine. Now we can see that out of 200 stocks, we have eliminated around 60 stocks. And the final list has come up to 142. Now from these 142 momentum stocks, we have to select the top 15 stocks. So how do we do that? Again, for that, I'm just going to export my screener and then show you how to rank and select the top 15 stocks. Here is the sheet that I've downloaded. In fact, I have prepped the sheet a little bit where I have kept only the name of the stock, price, performance, percentage in last 6 months, 3 months, and 1 month. Now we are going to rank these stocks, sort them according to their performance and rank them for 6 months, 3 months, and 1 month. And after doing that, we will also be finding out a cumulative rank, which will be taken into consideration for selecting our stocks. This is for 3 months. We'll also be looking at the 1 month ranks now. So cumulative rank is nothing but the sum of the rank of 6 months, 3 months, and 1 month. Once we have arrived at this, we would want to sort this from the best rank to the worst so that we will be able to get our top 15 stocks. In fact, at this juncture, you might have noticed that we have not yet gone and looked at how the stocks are doing in terms of the number of updates that they have had. So we've also had a filter which said that the stocks have to have at least 50% of updates. However, unfortunately, for this particular filter, there is no readily available screener or a filter. So what we will be doing is that we will be doing this manually. I will be using an older video to show you how to calculate the number of updates for a stock. So you may not be finding the same names that we are seeing here over there. So please bear that in mind. I'm just going to open a new Google Doc sheet, and then using the Google Finance tool, I'm going to download all of the information for a particular stock here, Torrent Power, for the last 6 months. What I'm trying to essentially do here is to, one, get the price related data of Torrent Power stock for the last 6 months. And then I will calculate the daily change in price. So the daily change in price will tell me if the stock had an up day or a down day, if the price has increased or decreased. So this will help us to understand this will help us to count basically the number of up days and down days we have had. And then we take the percentage of up days to see if it is more than 50%. So what we're doing essentially is seeing if this particular stock will fulfill my condition that the stock should have at least 50% of updates. If it's not equivalent to 50% or more, then we will not be considering the stock as a stock in momentum or a good performing stock for us. We will essentially consider it as a volatile stock and therefore eliminate it from our list. So for us over here, for Torrent, we definitely have. So Torrent clearly shows that it has around 53% of updates, which then qualifies for our filter. And therefore, Torrent will be considered as the top 15 momentum stock for us. Similarly, what we will be doing is we'll be doing it for all the 15 stocks that we have identified previously. And this has been done previously for the ease of showing it to you guys. And we are seeing that Indus Tower does not qualify for it because it is below 50%. It's showing only 48%. So what will we be doing is that we will take the next best rank, which is currently Tata Motors DVR, and then we will calculate for that also and see if it is fulfilling the 50% or above updates. So we will simply not be taking the next best stock, but we should also be finding out for Tata Motors DVR. We already calculated this before and it is also above 50%. So basically now the top 15 stocks for us to invest in, what stocks to invest in become these 15. In this video, therefore, what we have seen is we've first started with the introduction of why we have gotten into momentum, what exactly is momentum investing, and what are the fundamental beliefs one needs to have if they have to adopt the momentum portfolio strategy. After that, we've also seen that there are 4 crucial steps that we are following currently in building our momentum portfolio. And this video covered one step in detail. We have covered the first step of what stocks to buy. In the next video, in the coming video, I will be covering the next 3 steps. How much to invest, that is what is the proportion of amount that I have to invest in the stocks that I have chosen. And when do I enter the market and when do I exit the market, especially with respect to our portfolio. Thank you again, once again, for joining us in this video, and please stay tuned for the next coming up video. Thank you.